Yo, what's happening, bulls? Where are we? Here we are. Happy Tuesday. Got a bit to cover, including me coming clean. Where are we? I'm going to talk a bit about just the main charts, Bitcoin, etc. What do we got? All right. So basically, if you've been around, you saw the crash, the biggest crash that has happened in my 7 to 8 years, mid 2017. So early 2017, March, April 2017 was when I started getting involved in crypto. Started going to college meetups at the local university on the Sunshine Coast. So that's 8 years. 8 years of making money and losing money. A lot of this trading success depends on your personality type. Okay, this is a massive indicator of success, of what type of success that you're going to have, and then how long-lasting that success is going to be. So my character is somebody that takes risks, and somebody that looks for ways to game the system and find an edge, and then roll a big pack of dice to try and speed up the process. That's my guilty personality type. So this whole trading journey has been basically a battle against that for me. Creating systems, following systems, and then right when you need to follow them the most, not following the system, basically. So the amount of times that I've successfully lined up huge profits, sometimes taken them, most of the time not. It's easy to say things. It's easy to tell other people what to do, and it's easy to know what to do. But acting on it and enforcing those rules is very difficult, very discipline orientated. For example, my brother and I have a Bitcoin only trading account, 30-minute time frames. We have rules, we have settings, we hold each other accountable, and that account wasn't touched, wasn't phased at all, and during that liquidation event whatsoever, nothing, no problems. Like lost 5%, which is just a standard loss, no sweat, and that was because we hold each other accountable. So realistically speaking, if you don't hold yourself accountable, follow your own strict guidelines, rules, you're going to fail in the trading game. Okay, so that's why a lot of investing succeeds, because you do nothing. Okay, the more you do, the more you can fuck up. So basically, yeah, I got wrecked. Already talked about it in the Blockchain Bulls chat. Basically what happened was, or had last couple of weeks, had some fantastic trades, some big trades. Risked, started off only risking $500, turned it into 10k, and then risked about $4,000 of that, and turned it into 25. This is all in the space of a couple of weeks, and then pretty much fully rode the Solana and Pump Fun up to a high, something like this. Basically entered right there, followed our entry, waited for the price to come down into this area, longed the fuck out of it right there, 20x, and pretty much was waiting for it to go into this take profit area, into this range, and as you can see, it did not. And not only did that, but it came down and I lost money. All right, I basically didn't cut the profit. I was expecting it to. My thesis was for it to go into this box. I did wake up. The missus is pregnant. All right, so she wakes up a lot to piss. Woke up in the middle of the night and checked it. Went right when it was up on here, and it was up $8,000 US. The trade. And obviously in hindsight that would have been nice to just close it right then, but I didn't have a system, I didn't have any preset TPs, not that they would have got hit anyways. I was aiming for this, didn't happen. But one thing that I really wanted to sort of touch on was the fact that when this trade was on, okay, so this was up $6,000 US. The other trade was up something grand US, $8,000 at one point. What happened, right, is quite odd, and that is, I started getting glimpses of the trade not going to be successful, and not going to go where I wanted it to go, and I just dropped my chart time. I spend hours on the charts every day, and that got cut in half, maybe even into a quarter. I didn't want to see it. Okay, I was just this blind. Like, these entries are fantastic. Like, look at these entries, right? Like, I entered like right here, and then added more like here. So the entries were just phenomenal. The Solana one was the same. I'm like, okay, well, these entries are just, it's also like, I make good entries on trades very often, but there's still this underlying mentality of, you got to get everything out of this one because it's not going to happen again. And that's just like, so deep ingrained, even after just constantly entering great trades, great spots, just over and over and over. It's still there. So there's a lot of psychological things going on. There's layers of it. And if you think that you don't have any sort of psychological problems going on when you're trading, you've completely lying to yourself. Even the best of the best. So the goal is, when it comes to trading and even investing, is to take the thinking out of it. Do the thinking way before the game starts. You know what I mean? You basically do all the thinking before the game starts, and then once it's game on, you just follow the steps every single time. But with caveats. So you follow the steps, and the steps need to have if this then that's. It can't just be blindly following steps. The steps need caveats because things change, and that's what make us better than bots, is that we can adapt to the current circumstances, and not just one single circumstance, but many circumstances simultaneously. So that was one error. The other error, the bigger error, was me back in January, in that entering a bunch of leverage trades, 2x, 1.5x and shit, with a lot of capital on some big altcoins that I couldn't see failing. For example, Dogecoin, Render, Nia, what's some other ones like Sui. What was some other ones? Pengu and TRX. TRX still went really well. That I still closed that at a win, but yeah, I entered them bad positions, bad entries, and then I was on holiday at the time in Japan, and they started crashing, and I just thought I'll just add some extra capital to it, drop the leverage down, weather this dump, and then when I get back, I can focus on it better and sort of cut the losses or rearrange the trade. And then while I was away, it basically just completely nuked 50%, and I basically just kept feeding money into it, bringing the leverage down to like 1.1x on all of them, which is just, it's obviously just completely retarded. Because breaking the rules straight away, it didn't cut the losses. It was just sort of like a out of routine, just on holiday. So it's not good to have trades on when you're on holiday. I can fucking guarantee you that. Every single time I've gone on holiday and had trades on, they've always failed. And basically just fed money into it, and I was just like, oh yeah, well, it's 1.1x or whatever, so the stop losses are like minus 80%. Even at the lows, bear market lows or whatever, even at the lows, they were still like minus 60s, minus 70% away from the current price. And sure enough, pretty much every single one of them got tagged right at the end on that crash. So I turned in small losses into massive losses, and I learned a lot. So pretty much still 8 years in, the game never ends, and you never stop learning. What I take from it is a shitload, actually. I've got a lot of modules to make and a lot of things to repeat. Hopefully I can help a lot of people with the same sort of situation to prevent them from doing that, and learn from my losses. But what I have learned mainly is each personality is drawn to certain types of failures, certain categories of failures, and I have learned that these 8 years I have become a very good trader that's just missing a couple of pieces of discipline. And even after listening to the Disciplined Trader and fucking what's that fucking book I read it twice a year. Gone blank. I'm too busy bringing up pain. Being a great trader, learning to trade, having a few problems, those small problems can snowball into large problems. Like for example, I could be 90%, 95% good, 5% bad, but those 5% bads can basically delete the whole 95% of good. So, identify what you do, because that's what I'm saying is, like, everybody makes different personality types makes the same concentrated type of mistakes. You might make this mistake, but then you've made this mistake, this one type of mistake, fucking 20 times, and you've only made those other types of mistakes 1 time. It's categories, but we can go through that plenty. It just all comes down to identifying it, and evaluating yourself, basically. So, I mean, there's no, like I said, there's no problem for me making great trades and making the coin at all. Great trades is what we do at Blockchain Bulls. Huge, big, high leverage trades. It's just keeping them and not letting them turn into losses, and then just the out of character mistake that I did, which was not basically just the oldest trick in the book, is just not stick to your plan, and then change the stop loss, and then turn a leverage trade into a long hold. So especially, I was always very heavily leaning towards not leaving leverage trades open for long, regardless of the leverage. But this is completely concreted it. Leverage trades need to be treated like hot potatoes, with a desperation to get out of them. That's something that I've extremely learned. And then also another thing that I have learned, but I've been repeating it a lot lately, is when it comes to leverage trades, entry is everything. If it turns out you had a bad entry on a leverage trade, you need to get the fuck out of there as soon as you possibly can, whether it's straight away or as soon as it comes even close to break even, or the next swing low or swing high that brings you close to your entry price. If you recognize that you made a mistake and that actually is a bad entry, you need to just close it and start again every single time. Alright, so I've got a rule book. We're still writing it. There's a lot of work to do. We're coming back stronger than ever. I mean, I need to. I'm down. I'm down bad. It's time. I'll spend the next 7 minutes, something, going through some charts together, have a little look at the current price action. This is the one that hurt us. Let's look at Bitcoin. Alright, so what are we looking at here? We are looking at a large giga trend that's been going on for so long. So long. Look at this. We drew this green line literally years ago now. We drew this green line down back in 2023. And pretty much the rate of the way that it's stuck to it has been nothing short of amazing, and I do believe it will continue on, oscillating around this linear trajectory. This recent pullback, if we extend the channel up like this, it's similar to this. And you know what happened after that? Back higher. So if this was to remain correct, which it has since November, well, at least bare minimum February 2023, this is to remain correct, then Bitcoin's going to find itself up at the 200k mark. Let's see how fast. When this broke down here, I'm not huge on fractals, right? But let's just get an idea. 100 from breaking below the trend line to the new high, 133 days, all right? So if we keep this like this, all right. I'm looking at we're looking at pretty much Just bear with me. I'm just thinking. Happy here. Yeah, we're looking at 250k Bitcoin in May. If this was to continue its trajectory and not turn around now, there will be a point, obviously, where this ends, the party ends. But look, listen, it's been going like this from almost 3 years. So, the trend is your friend. Keep it simple. There is still hopium around and available. But let's have a little look at a couple of other charts real quick. Actually, I'll just zoom in because I know you're probably looking for a low time frame. Bit of low time frame action. Alright, see this? Look at the Bitcoin chart. One candle equals 1 day. One candle equals 1 day. Alright, one candle equals 1 day. You just do this. Alright, you range it. Range things out. This is just ranging right now. Currently ranging. Okay, this is a bull trap. Bull trap. Alright, grabs the liquidity. See how it's come back up and it's closed in this. Alright, so if you get candle closes now down below 108. Alright, if you get candle closes below 108, okay, then that's when you start getting bearish, alright, because it's coming back into this previous range. It's coming back into this shit. Alright, this shit. Alright. So just keep an eye on that. It's bullish until we're below, candle closes below 108k, daily candle closes below 108k. Bullish until daily candle closes below 108k. If you want to talk larger time frames, weekly chart, we can go on the weekly chart. Things get a bit more serious on the weekly. We've got blue bars still big blue bars. Okay, momentum's falling down. Alright, it is an uptrend though, so we know that momentum can stay up for a long time. For example, we had big weekly blue bars here, and it took many weeks. So it took since the first blue bar, it took from May all the way to November to get the pump from the blue bar. Alright, so volatility contracted, volatility expanded. Alright, so pretty much you waited from the blue bar, from the mean of this range. It did pump 80%, but you waited from May, from the start of the move, the contraction, all the way to November. Alright, so this is, and in saying that as well, from the start of the contraction, it had wicks down minus 28% at one point. Alright, so similar said, the price can easily go back down to 83k and then up 80% from there. Just going off what's happened historically. Alright, that would bring us up to 150k. And that would be just a standard move. Big head fake, it's called a head fake. Alright, so again, blue bar, head fake, opposite direction, closes back here. So this is where you say, okay, it's bullish. And then makes another big move. From the lows, 66%, 67%. Alright, so this is just sort of standard Bitcoin price behavior. Can go much lower, can go down another 30% before it goes higher on a big weekly time frame. So if you want to talk weekly time frames, then you're talking like 6 months moves. Alright, so it's like, you get what you're given. You got to wait for it. Here's the American stock market real quick. So this was our prediction lines. We've had them for ages. Basically, following this, when it breaks out, it's either going up or it's going down. Okay, it went up, and then I said there's going to be a sort of an overreach out of this trend line channel, and pretty much we're pretty close. I mean, it's basically more or less what's going on. You can see that I wanted it to range, or expecting it to range. I still think that potentially going to be now looking for lower price action to come down into this area maybe. So we might be looking at another bit of a extension, a continuation of this downtrend before it bottoms up, does some shit like this, because we all know the money print is on. Everyone's still buying rapidly. Another canary in the coal mine is the American dollar DXY, sorry. Look, below here helps crypto pump, and it has, but you can see here the price is either trending or it's ranging, and this has been going sideways, and you can fit it all within the box. You can fit 90% of price action within this box since October. This is a bottom. This is a standard typical double bottom. You're looking for higher prices in the DXY, which is typically bearish for risk assets. That'll do. Take it easy. Any questions, leave them in the comments or join the Blockchain Bulls chat and we'll talk about it there. Peace and love. See you tomorrow, 7 p.m.